Hello. Uh, this is a request from one of the subscribers uh, on copper. This is copper on the weekly time frame. We would there was a sweep of liquidity. Oh, let's just do it from a high time frame. Right here we are on the 3-month time frame where we had a sweep of liquidity. Go check it out with your own charts. There was a sweep of liquidity here. Manipulation. We always sweep liquidity first before we manipulate. And then we had a bigger displacement over here. We have an imbalance here, right? In form of an FVG. And logically, an FVG, an imbalance, is a region of liquidity, and the market always tends to be attracted in it. We always tend to go fill that FVG before we continue with the trend. We always tend to fill this imbalance, right, before we continue with the trend. So logically, we are targeting these lower lows. And you can see the FVG is already fully filled, right? See, after this sweep of liquidity and manipulation, this bigger displacement here and leaving this gap over here, leaving this imbalance, is a clear picture that this market this market is angrily bearish, right? It is moving. It is moving. It is. What are? It wants to get to the lower side, right? It wants to get to the discount zone for some liquidity, right? So after the fill of this leg of this 3-month FVG, logically we will be targeting these lower lows. This right here, we are going to see it very clearly on the next time frame, the lower time frame. These are market structure shift. Let's move on the monthly. On the monthly, this is what you can see. This sweep of liquidity from the 3-month time frame. We got market structure shift right here. Right, this is the 3-month FVG that we just saw, which is already filled, as you can see. And reasoning with this concept, the bearish version of the standard trading model, we always need a sweep of liquidity, first break of structure, it's lower low right here. This is where we take our sell to potentially target these lower lows. So we can see in the long run, this guy here, I'm going to drop down on the lower time frame, and you can see very clearly that this guy was the first break of structures high right here. We had some break of structure around somewhere here. And before we read this guy, there was a sweep of liquidity here. Market always respect liquidity, right? This sweep of liquidity, of course, I said we should always be looking for a first break of structure in between this leg, right over here. Was there a first break of structure over this leg? Maybe I should drop down the lower time frame and find out. But without even dropping down on the lower time frame, this is the importance of mastery. Look at what is happening here. Right? These are just the little things that I'm mentioning, and someone might take it as a joke, right? But this is something that I have back tested for some time. I have seen it working. I don't know how to say it. Whatever the keynotes that I'm mentioning here, just go back test and find out whether it works, whether it's truth for you. As simple as that. Because we are on the monthly, even without dropping on the lower time frame. I can see that there was this market was wanted to reverse. See this pattern right here, a sweep of liquidity. See, there was a liquidity build up here, relatively high highs, and then we manipulate like this, and boom, we're right here. This pattern usually is what? Is an indicator that this market is going to reverse on the nearest defender. Right? This is a kind of what can I say? Even if there is no clear first break of structure here, when you see this, then the market is likely to reverse very, very soon. Go back test it, check it out. You see this? Mark the nearest defender, that's when you're going to reverse. This right here was a sweep of liquidity. Right? Where did we reverse from? There was kind of different here. All this FVG was liquidity. All this liquidity here, liquidity, this FVG. Oh man, can I see? Okay, this idea is big. This is something that can't be covered in one video. If I were to talk, I might talk for the whole day. Because liquidity lies in two places mostly. Mostly liquidity lies in the place, either swing highs or swing lows, like this places here, like this place here. This is where liquidity lies in. Or it lies on the FVGs, on the imbalances. Imbalances are areas of liquidity where the market always tends to be attracted on it. This here, after the fill, then the market reverses. Alright, we can see here, this is a liquidity, this is a target, this is a draw of liquidity. The market always tends to be attracted to these regions. This market swept liquidity, manipulated, right? After manipulation, we displace some let me show you. After this sweep manipulation, we displaced this FVG right here, right? After displacing this, this gap here, the market will always tend to fill it. After the fill of that gap, then we target now this outside liquidity. This was internal liquidity. This outside liquidity. You see, coming here, I can see there was a still we are on the monthly. We can see there was a market structure shift over here. We had something happening here. You can see what is here. What was here? This imbalance. What are signs of imbalance? The market always tends to be attracted into them, then target these high highs, potentially these high highs. But what we can see logically, reasoning with the defenders and the goalkeepers, right here we have a defender, sweep of liquidity, right? Liquidity as the defender, and we can see after the sweep of this liquidity, we manipulated. This is a manipulation, right? And now we are potentially riding this market. Take these high highs, but we'll always react off of this guy because it is the first break of structure right here. We react a bit here before we rally down here. We rally up here, take this high where we will reverse from. It's my bias, right? It's just a bias. It's just a bias. It's my own subject. Like I said, I'm very I made it very clear that there is no marking scheme in these markets, right? The only what the only thing you have to do is to trust your model and back taste your model. That's the only way you build confidence with your model and trust your model. That's the only way you'll be executing your model, not outside your model. So we can see we had a defender here. There's a goalkeeper right here. This guy here. Mark this week from there to here. The market is just reversing off of it. That is it. Let's drop down on the lower time frame and I show you exactly what was happening after this sweep of liquidity, and we reacted off of this goalkeeper there. Okay. You see, there was kind of some guy I explained on the monthly here. We are on the weekly now, right? We can see the market went and see where we went, where we reversed from. This goalkeeper, it moved down, just moved down. That is it. This is exactly what this market was going for down here, this guy here. Because we had a sweep of liquidity here, still following the bullish version. See, it is very important to have different confluences for your to support your bias. I had a sweep of liquidity here. With this sweep, see, liquidity was taken here. Some break of structure here. This guy, the market was coming for it, and we had now goalkeeper here, where the market reversed off of it. That is it. So in the long run, this is what I think copper is doing, right? Right now we had a sweep of liquidity here. I don't know whether you're seeing it. Maybe I'm overdoing this. Okay, let me just add liquidity here. In the long run, I'm expecting this guy to go here and reverse of that place. Take this guy, or see, anything can happen in the markets. Yeah, you can even take that high. But following our bearish version of the standard trading model, this is what we expect. But you know, we are on the weekly. Remember, we are on the weekly. These are higher time frame. See, anything can happen. This market is just around here. Yeah. We might even because remember the 3-month FVG is already filled. Anything can happen. You might even reverse off this place and to take these lower lows. Remember, anything can happen in these markets. What we're just doing is just predicting this, but just predicting this guy take this high and then right, following our model, because there was a sweep of liquidity manipulation, first break of structure that is very conspicuous right here. Then we had a market structure shift, and logically we'll be expecting this this first break of structures high to be taken, and then this market reverses to take these lower lows. That is what we are predicting on copper, right? Yeah, everything that was happening here was just clear. All this right here. Yeah, that is it. That is a simple bias for copper. This year on the 1 week now, this is what I'm expecting. This is exactly what we're expecting over here. Yeah. Expecting this guy to come here, and in the long run take this lower high. It's just as simple as that. Just follow the model and don't complicate anything. Don't complicate anything. We are looking for the bearish version, and we can see a very clear break of structure, bearish version like this, right? A sweep of liquidity, which we had here, and then first break of structure. This guy here, see? Okay. Someone will now argue, why are you marking this guy and we had another guy here? We had another first break of structure. This one extreme. This one is the extreme one. That's why I've put this stop loss right up here. You understand what I'm saying? We might, you see, or you might set your entry around here, and your entry not being triggered. Set your entry here, because after this kind of acts as a defender, and we had a goalkeeper here, which was not mitigated right here. So this market might reverse off of this around here, and boom, the market leaves you. So this guy, this is where we take our shell to potentially take this lower loss. I have marked this guy because even you, when you go to a higher time frame, that is the one that is conspicuous. That is the weak line on the. Watch this. This is the guy. This is the guy. All this one with this a move downwards. But this is the guy. Right. So that is a simple hit. That is a quick one on copper, and you can confirm that the strategy is not only used in forex. We can analyze any kind of a pair of any pair of tradable asset. So, example, this is copper. You can always drop down on the lower time frame because I've stopped on the weekly time frame. Now, a good student, someone who wants to learn, will now go on the lower time frames and try find out exactly what I've just done here. Yeah. Not wanting to be spoon fed everything, right? Yeah. If you will desire that, then look for a mentor to pay and let them give you everything, force food into your mouth, right? Because the best way to learn is by looking for after getting information, then you go confirm own and make it your own truth. That is it. So thank you so much. This is yeah, it was just as simple as that. So take care this weekend. If you're new in the channel, you're seeing this video for the first time, you can always subscribe and like the video and comment, right? Comment. That's the only way we can grow as a family in this channel. So thank you so much, and take care, friends.